Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Monday, July 8th, 2024. It's 2:58 p.m. Eastern Time as I'm starting the video, so a little bit more than an hour to go in the trading day, and hopefully I can whip through the charts pretty quickly, get this one out to you, uploaded, processed at YouTube, and out to you before the close today. Remember, I tend to post the videos as soon as the ink dries, meaning what that means is as soon as the initial rendering or processing stage at YouTube is done. And what they do is they first will, the video quality is going to be in 360p or standard definition. So when you get that, you have to just watch it for a minute or so, refresh the page every minute or so until you get that 720p option in the playback settings, and then it'll be a high definition. All right, so I'm going to start out here with the equity markets because this is probably the most important thing to watch right now. This is a 15-minute chart of QQQ. This is a near-term uptrend line, really off the beginning of the month. This is July 1st right here. And so you have an uptrend line off the recent lows, and we're on there right now. SPY has broken a comparable uptrend line. I'm going to get to that in a second. But as I often say, even if you're only trading one or the other, meaning the S&P 500 or the NASDAQ, you always want to chart both. At least I do, because there are plenty of times where I see one break down, and at that same time, the other one, meaning SPY or QQQ, as that comparable support, and then that support may hold. So SPY is already broken down. I'll get to that in a second. This is at least a very minimum target right there. There's a small, I should say minimum, there's a little gap right here. And so you probably hiccup there around 492. That would be, if that 487.29 level is hit, that'd be about a 2% drop. And now what that may do is I've still got about 3%, I think, from today's highs or where we're at right now, only about 3% to the upper end of that. Remember, I gave you a relatively tight, I'll get to that in a second, end of the market rally range, and we're in the middle of the range right now. So like, to me, again, if we hold this level, or we have a whipsaw and regain, meaning a breakdown and then a snapback above it, I still see at best 3% upside. And again, I've shared those targets the last few weeks based on numerous fib extensions, Fibonacci retracement levels, and of course price support levels and things like that that come in. So we're in that sweet spot now, or in that target range. I'll get to that one second. And this is still a big level here, this uptrend line right here that comes off the early or the late April lows. That is still an initial on a current swing target. And if you look at this, let me jump over to a 60-minute chart, and this will show it a little better. I can draw it a little better here. So there's the still targeting this level right here is a initial kind of swing trade. If you're not a very active trader, active traders kind of do this, game the little squiggles. But that's still a likely target, and it comes in, I'm going to give you a level on NQ, the futures. It looks a little bit better there. But around, you can see I have a support / target level here about 478.80, and that's a little bit deeper, and that would I put pretty good odds that if and when we hit this trend line, and if we can break this, that's probably going to be the catalyst for it. Now, here's the thing. Let me get to the daily charts in a second. I'm going to talk again about the upper end of those bounce target ranges that I have. But as of now, as I'm doing this video, we're starting to crack it. So it looks like, no, right there, right on the line. Let me get to the futures for you in a second. I'm going to cover SPY first. All right, so there's a 15-minute chart. On the 60, on the 15, I had it right on it. So if you want to give it the benefit of the doubt, you pull this line right here. If you have to squint, you say it's not a breakdown. When you're going up, you want to see a solid, and you will likely see it. I think we're starting to crack it here on the 60, or right on in the 15. The divergence to say we'll get it. So it looks like we'll dump into the close, go red today. By the way, speaking of red, this is another day. I've been doing this for a long time, and I haven't seen. I've seen periods of extended poor market internals. This one may take the records for both how long we've seen this negative breadth. Today is just another of many examples. So as I'm doing this, you can see in the upper right-hand corner, SPY is QQQ is green, been green most of the day, 0.13% positive. And then you look at QQQE, the equal weighted. This is a quick way to look at breadth, down red, 0.14%. And more so as I have a real-time, breadth indicator I came up with years back. I've shared it with you many times. I'm doing it off to the right of the screen. Well, I can do it for you here. Let me move this over here. So you'll drag it here. I have all the components of the NASDAQ 100 in this watch list. So you simply sort by the gainers, right? And there's on the bottom, if you can make it out in the video, there's 101 stocks. Why 101? Well, Alphabet, for example, has two share classes, GOG and GOGL. So they're counted as two different securities, even though it's the same company. And what it shows you just go down to click on the last green one, because they're sorting by gainers. And that tells me right here, 36 of the 101 items in the NASDAQ 100. So 1/3 are trading green. 2/3, as you can see here, as I scroll down, are trading red. And again, that's very poor market breadth. Yeah, and you go to look at the big ones, you can see Microsoft is red today. Still got that divergence working, building, negative divergence. Apple is virtually flat, 0.32%. Got that. It was an ADH before. I told you it would be all the better, and we got it on here. Let me move this back over. On the daily time frame, we've got that now, a divergent high on Apple. So we've got it just about check boxes on all of them. Either they've recently put in a divergent high or currently have one, the big leaders. And so it's all about this one today. Again, NVIDIA, what I just showed you proves to final. It's almost exclusively, the Qs are green almost exclusively due to NVIDIA being up 2% due to its oversized cap weighting and the fact, as I just showed you, that equal weighted NASDAQ is red. And 2/3 of the stocks are trading red today, and even the big names too. Alphabet red today, Amazon red today, Meta red today. You get the point. So there, it's all about Mr. NVIDIA today, and I threw that out as a trade idea for you again. Like I did last time we got to this level here. It's 129.83. As I said this morning, we were in pre-market right here. That was immediately followed by a 8% or 9% drop to my target zone. It was first highlighted here when I was on vacation, bearish engulfing candle. So that's a long-term trade. You take a shot. This is a 60-minute chart, so you don't see it, but all these candles here on the 60 comprise the daily, the bearish engulfing candle. So that trade for a longer term swing trade or potential topping trade is you just have a stop above the recent highs, because that would take out the bearish engulfing. And again, we hit the first target, hit again. So my point here is that I mentioned this was the minimum target from back here before we even got there. So if I thought that was good support at the time, let's say on a scale of 5, 2 or 3 out of 5, well, it's now a 4 or 5 because we've since hit it twice, the top of that support zone, or then came about in the middle there, in bounce. So we have these additional reactions to help validate that as a significant technical level. And you also have the uptrend line that I've been highlighting on this 60-minute chart in the video right there. So now the fact that we've already hit and checked that support level a couple times since tells me that if and when, more of when we break this trend line, it'll probably bring us down there again. And although it's still support, as I like to say, support is support until unless broken, I think the odds go up that level will ultimately crack, whether we get one last hoorah off it or not. And then that should open the door. These are just near-term targets. I'll give you the second target zone. It was a hard target here before, and inside, looking at the charts, more of a zone. A zone is when it comes in close proximity, almost 107 to 110. So that's about a 3% range. T3 right there. And then, of course, I have the longer-term targets I gave you before on this board here. There's your uptrend line right there. I just tweaked it a little bit. T1, and this is a much more significant trend line off the 2022 lows. If and when that's taken out, should open the door to these additional downside targets there. So there's NVIDIA. There's the state of the markets. Again, let me go to SPY. I showed you QQQ just on the levels. So on SPY, we already broke a comparable uptrend line. So again, this is why if you trade SPY or ES, the S&P 500 futures, and you shorted that breakdown, you probably wondered, wow, that was a clear, very obvious trend line. Surprised we broke down. We're just going sideways. Well, again, that is 100% due to the fact that QQQ and NQ, the Nasdaq 100 futures, just fell to they're comparable, coming off the same point, the beginning. That's the July 1st right here, July 1st lows. And so we need to crack that, and that will then likely bring in the sellers. Or, like I like to say, support is support until it's broken. So that's why you want to always keep your eye on both of them. And even if you have the mental energy and the time, keep an eye on the futures as well, whether you trade them or not. You want to see that, because sometimes I'll see QQQ breakdown. It's rare, but sometimes you see a similar trend line or horizontal price support, and then at the same time QQQ breaks down, NQ tests and successfully holds. But it's pretty clear to me. We've got this is a 15-minute chart of the futures, NQ NASDAQ futures. There's your negative divergence. This is a divergent high right here, just like this was a divergent high, just like this divergent high gave us that drop into this divergent low right there. There's your AK bullish positive divergence, gave us this rally. It was a series of one high, divergent high. We pushed up, made a second, but still the same divergence, larger, another correction, and one more thrust up, giving us three consecutive, but really all the same divergence starting at this point, and got a bigger drop that ended with this divergent low right here that gave us this rally. And you've had this. Now here's the thing I say, that stocks or securities can correct in one of two ways, or a combination thereof. They can correct in, most people think of correction in time, in price, things go down, but they can also correct in time, or a combination of them. A little bit, this was mostly a correction in time. We went down a little off that first divergent high. So that sideways trading, we had a well-defined range there, popped it, broke out, back tested it, ripped up, put in another divergent high, another correction, mostly in time so far, going sideways. But we haven't taken the divergence out. In fact, it's only grown larger. So there's that trend line that we're watching right there. And whether it breaks today or not, there's also, this is what I like to call the BOD, or benefit of the doubt support level. You can see right here for your futures traders, or again, even ETF traders, 20,579 roughly, or 20,580 is price support just below the trend line. And if that's taken out, it's real thin, meaning we just ripped right up. This is probably where you're going at minimum, and if and when we take that level out, we'll go down a little more. So that's what that looks like. Let's see, I don't know, where's my ES chart? 1 second. Okay, this is a 60-minute chart of ES, the S&P 500 futures. You've got the divergent high, like you had a divergent high here, like you had a divergent low there, was a catalyst for the rally. This is your primary trend line, again, off the mid-April lows, the same one I'm targeting, a comparable trend line on QQQ, NQ, and here's a little minor trend line on the futures that hasn't been broken. So you can see here, you had a divergent high right here, DH right there, correction. And that was mostly a correction in time. Pushed up, made a marginal, but still divergent high, extending the divergences, and so there it is. So that's an initial target. If and when that breaks, that will lead to a bigger drop and open the door to some deeper downside targets. Speaking of those, so there's your 15-minute chart right on the line right now. If we break it today, we'll dump into the close. Otherwise, look for that tomorrow. You can flip it around, say, well, if you're bullish, you buy pullbacks to support. Not when you see these kind of divergences. It's usually, if it doesn't break today, it'll probably break very soon. And let's not forget, we're very close to the upper end of that market top range I gave you a few weeks back and highlighted since, based on numerous technicals, Fibonacci projections, Fibonacci retracement levels, everything else. So these are longer term targets that I've laid out here for you, all the way down to T6. Both this is QQQ, I have SPY. Those T6 levels are the previous lows from October of 2022. And you can see I measured it, we're about, from today's highs, about 3%, maybe a hair less, up to the top of that. And it's a relatively tight range. Runs up to about 511.74, so you can call that 510. And again, so they're 510 to 512, somewhere around there. So you're talking about 3% upside. And you can see here on the daily, I have the trend line a little bit different. You can draw this way, or you can do it this way here. We'll just leave it the way I have it drawn here. So I already gave you 15-minute chart, 60-minute chart. Here's the daily, and we have the divergences that I showed you all the way out right now, from every time, from the 15-minute, 60-minute chart, daily chart, weekly charts, and even rarely seen negative divergence out on the monthly charts, which kind of indicate the magnitude of the next turn when it comes, and that's why you have these targets that are going to give you, if and when hit, all the way down to T6, which, by the way, if we get down there, I'll most likely be adding additional targets, but we'll see. First things first, guys, and that's to see if we can get some sell signals here on these near-term trend lines, or I'd love to see a push to the top of the range. We're getting really stretched, overbought, but again, it's only 3%, so certainly doable. Would be, to me, just a great level to get aggressively short. Still got some hedges or pure plays. I'm going to get to those in a second. Crude oil being one of them, but just want to update these targets here. And then on SPY, we're going to walk this backwards. There's your uptrend line, beautiful little rising wedge pattern right here. There's your divergence line. There's your uptrend line. Gives you a nice, clean, bearish rising wedge. Of course, you have the divergence. I don't have it drawn on every board. These are your big negative divergences there. T1, T2, T3, all the way down to T7. The numbers, I must have one additional target for SPY. And of course, we need to see that trend line go. SPY, as I mentioned, has a little more upside in my range. Again, these ranges were a function of different Fibonacci's and things like that, retracements and projections and other things. And so we'll see. So it's a relatively small range, and we're in it right now. We're in the low end of the range, and I'm putting a higher weighting on QQQ. It's just a more concentrated view or weighting of the same stocks that are the big weighting in SPY. SPY's more diversified, more dividend paying, steady Eddie stocks, defensive issues, but it ultimately they move together, and it's like trading. You've heard me say it 100 times. I'm bullish on gold. I'll usually trade silver and or the gold mining stocks because I'm either going to be right or wrong on gold, and silver and gold and GDX, they move up and down more. They follow gold in the same direction. They just go up or down more. So same thing. You can trade SPY, but when you're bullish, you're going long, the most, 500 companies diluted. You're going to have a lot of steady Eddie, utilities and other stocks that typically don't move much holding you back. So the tech-heavy QQQ is just more of a concentrated play on the stock markets. That's simple. All right, there's your levels. 60-minute chart I want to mention. We already broke down. That's what I was saying before. But QQQ is testing its comparable trend line right now. And so hopefully by the time I do this video, it'll have cracked, and I'll loop back to it. And then again, I'm targeting still this trend line off the April lows is an initial and minimum, not minimum would be, this is your minimum target right here, 550 on SPY. It's small. It's not even worth covering, unless you're an active trader, and this certainly is. Or if you're bullish and we're going to new highs and beyond, or you're trying to fish out the last few percentage to the top of those ranges I gave you, you could go long there, but not based on these divergences. And then that's the next stop down there, and then if and when that goes, I would expect them to come in and buy the initial pullback to these trend lines, especially if SPY and QQQ hit around the same time. But when they go, that's going to give you a more powerful sell signal that, in my opinion, will sharply increase the odds that we're going to go down to those deeper targets I gave you. And for you futures traders, here's ES, same April trend line off the April lows right there. Here's your minor trend line. So I showed you on SPY the minor trend line being broken down. Here's another instance why not only do I watch both SPY and QQQ, I watch ES and NQ because there's just different subsets of traders. There's some out there that are only trading ES, the S&P 500 futures. I'm going to put a line right here because I do see a support level right there. So levels are the uptrend line. I'll zoom in so you can see it. And what happens, the way this works is the odds just increase if you wait to see more of these that break down. They're the same securities, the S&P 500 either via futures or the ETFs, and then of course the NASDAQ 100 via futures or the ETF. So boom, and then that's the BOD or benefit of the doubt support. That's about 55.90. If and when that's taken out, that's going to increase the odds that we're going to go down to hit this uptrend line right there, and then probably again tradable bounce off that, and then either game the bounce, look to reposition short on a pushback up or on a break of the trend line there. Now let's get to the other stuff. In no particular order, but let me start out with crude oil. Okay, so I mentioned last week taking crude as indirect hedge or a pure play. Again, however you want to trade, however you're trading. You may be in or out of the markets, equity markets, so maybe not. This was last divergent high right there. There's your breakdown back test, and you got biggest correction in months in crude oil. And now we've come full circle. We have a similar setup. So when I highlighted it to you here last week, I told you we had negative divergence and a trend line break looked imminent, and that if and when the trend line broke, that would be the next objective short entry, or where I would go to a full position short, and that clearly is broken down. So there it is, a very clear, well-defined trend line. There's a breakdown. We are coming up right now on the first target, so probably odds favor a reaction on the initial tag there. But I still think there's going to be more downside. And again, just to reiterate, I said it last week. Why is it an indirect hedge? Because crude oil is pushing up. Let me get to USO for you ETN traders. Plus, this is a chart I have marked up with my zones, just like treasuries. I have the same thing in reverse, yellow, orange, red zone, because when crude goes up, it's going to impact the stock market. Nothing out there is accurate and is real time. That's something that we can tick by tick, second by second, track the price on a real-time basis for inflation. That's crude oil. It's one of the biggest components of the CPI of inflation, and it is, again, it's the only one really in real time. Housing, you can't track in real time. You can kind of extrapolate what's going on, but the data is lagged. And there it is. So we're back into the orange zone. And as I mentioned before, the last time we got in the orange zone, I highlighted then. Same with treasuries dropping into the orange zone. We had the biggest correction of the year. And so we are back well into the orange zone, just a hair above the reverse, just a hair below the red zone. And there we took out the trend line. We took it out, breakdown, back tests on the daily. And again, so I have a high degree of confidence in how in this indirect hedge trade. So again, looking to be either now or at any point soon if you get short the markets. If crude continues, if you short crude and crude goes up, you're going to lose, right? You're going to get drawn down on that. However, I would be very surprised to see crude do this and the stock market do this. It is possible, but very unlikely for the reasons I've stated before, including but not limited back to this time. This is where you're going to start to hear the bobbleheads talking about crude getting back up, challenging the previous highs. And again, this is a big level it's approaching here. This is where every time, and we had the top stock market took it on the chin here when it got up to this level. This is, again, these are why these zones are here. So getting the red zone means you broke above that 83.14 level, and that's where the stock market will really, really start to take note. It's going to handcuff Powell on just how dovish he can be. We know we're probably going to get at least another cut, a cut, not another, but a cut this year. And but that's going to make it a lot harder for him to do anything more than just one cut this year. So we'll see. And again, and it goes the other way. If crude drops, then you profit on your crude short, and that would be the catalyst to give the market a little more oomph, maybe hit that 3% or so upside on QQQ. And again, this would be an offsetting trade. We already had that with treasuries. That worked out perfectly. Told you book profits. We also had gold and silver based on EUR USD. I'll get to that next, but I just wanted to show you the levels there. And then also on the USO 60-minute chart, this is the comparable uptrend line that I showed you on the futures, and we did break it. And so you had, again, that bearish rising wedge. So like I said, you can either pure play short it. Wouldn't have put it out as such if I would never take an indirect hedge if I couldn't make a case to be long or short that indirect, whatever I'm hedging with, on its own merits. But like I said, it helps out in this, and it's worked out very well recently. And the other one, so just the other day, I told you we hit the final target on gold, silver. I told you on GLD, and this is why, again, I use multiple charts. I use the futures. I look at silver, I look at EUR USD, and so I said, although we were just shy of GLD, time to book profits, and boom. So you sidestep that give back, or you profited by turning around and shorting it. Same thing with silver, SLV. We hit T2 to the button. So you were able to book the profits. There were I was highlighting. Remember that also follows on the heels of shorting gold and silver from the trend line breaks up there, down to these lows, turning around, reversing there, highlighting that, and that is objective long entries. And so the silver trade was good for a quick 9.5, 10, closer to 10% pop. You had multiple entries. If you missed the first one, it's highlighted again here with an even bigger divergent low. And then this is swing trading. You book profits, you take your 10%, and if you want to turn around, it's a 3% drop. You could have profited on that, or at the very least, you sidestep that give back if you book profits there and you don't short, you just wanted to get out. Same thing with GDX, boom, hit that 36.21 target, and boom, down about 3% as well. And remember, the silver futures, that's my go-to vehicle, to the button. That was that trend line, the max target there. Hit that, and again, nice reversal. And look where we are. We're at a little, so if you gamed if you reversed it, this is a minor uptrend line, may or may not come into play, but either way, that's a quick objective area to cover, at least lower your stops if you think there's more. And then bigger picture, I just wanted to highlight this, so I jumped over to the futures. You've got pretty much what looks like a symmetrical triangle pattern here, and so you can either trade off these levels, pull back to support, go long, or wait for a break of that, or buy a breakout above a break above the trend line right there. Right now, standing aside personally, I just wanted to give that update for you guys. And remember, it also aligned with what's going on in the euro US dollar pair. 60-minute chart always helps support the case to go long gold there, and boom, we hit that resistance the other day. Euro US dollar hasn't even pulled back that much. It's correcting in time right now. So again, I'm going to just keep standing aside for this one now, and I'll let you know if and when I re-engage. But you have the charts, you have the objective levels. I just don't want to force this trade right now. What else do I have for you? I got a post out to you on soybeans today, an update there. Remember, we hit the first target, pulled back. So this is fresh. I only updated that one not even half an hour ago. So you had a divergent low there, still a divergent low. I remember covering this in videos recently, highlighting as the best looking of the grains out there right now. And it's just simply an uncorrelated asset. It has no bearing or relationship to the stock market, so it's just a way to have exposure to commodities. And it's like everything, it's a trading vehicle. Divergent high up here, a little trend line, breakdown, you come down full circle, you wait for these divergent lows to set up, and then divergence is not a buy signal, but what is a buy signal is a breakout above a trend line. But this one was actually at support as well, as I highlighted on the longer term charts on SOYB and everything else. So that was a trade based off also on the daily chart here to go long at support with this positive divergence. And again, the potential, you still have potential for a lot more upside should this level hold. So simple stuff. You want to be accumulating down here with stops somewhat below, depending on your trading plan. What's your trading? Well, you're covering, we highlighted it back here too, off that divergent low. We hit T1, and it took us all the way back down to where we started, and so now it's objective again. And being that we already hit T1 increases the odds that if we go up, then we may take out T1 and go up to hit any or all of these other targets there. And quite possibly more. This is a big resistance up here. So longer term, if we break that out, that's going to be bullish. It's also most likely going to be inflationary because the other grains will follow, corn and wheat. And then again, we'll watch them all. They don't move the needle as much as crude oil, but and that's the other one that I almost forgot, guys. Natural gas. Mentioned being short crude, but long natural gas. It's not on fire by any means, but it's nice. It's still deeply oversold at support here. And this is the futures NG. Still very much, it's divergent low that I mentioned recently, still very much in place. The divergence, in fact, has gotten even stronger. The slope of these divergence lines is increasing. We're up today, not much, but again, so I'm still looking most likely the minimum target here is going to be that downtrend line in this former support zone, which is now a resistance zone. And of course, there's a resistance level about 240. If taken out, should be the catalyst for a move up there. I think what it's going to trade on is that hurricane that just landed, made landfall in Texas. There was a lot of hype and worry that what it was going to do, and that was put some pressure recently on natural gas. It's probably why the divergent low got extended. But I'm guessing it probably won't be as bad as anticipated. If that's the case, then you'll get a relief rally that should likely pop nat gas up there pretty quick. Could go the other way, but either way, I still like it. Just wanted to reiterate it. So short and bearish crude, long and bullish natural gas. Okay, I'm going to wrap it now. I'm just going to loop back over to the Qs, but I want to get this video out to you before the close. 15-minute chart. There, it's just starting to crack. Again, if you have to squint, but like I said, there's this whole area here, this recent consolidation as well. And so this is where the stops are set right now. So if we break it, boom, should be a quick swoon down. I give it a little hiccup stop along the way, and there. And we may never make it to the top of my that range. Remember, we're smack in the middle of the max bounce target range anyway, so just as well if it turns and rolls over here. And then you want to watch, what does it do? Do the buyer step in here? Probably a little bit, but this is where the first tradable reaction is likely, where you can, if you want to active trader, pop that. At some point with all the hot air in the market, and it usually doesn't happen right away. As the correction gets going, they start smashing down through well-defined support levels where the buyers should be stepping in. That's when you know something else is going on. When you don't see the buyers come and step in here, or God forbid, they just take it right down through that trend line. Very unlikely, but if they did, extremely bearish in my opinion. Again, I'm talking about the trend line off the April lows. All right, let me wrap the video up so I can get it out to you, and that way you might be able to, if it's your thing, game this what could be a drop into the close if we can just get a little bit more downside here on the NASDAQ 100 to clearly take us down below that trend line. This has been Randy Finney with Right Side of the Chart. Have a great day.